Welcome to Stephen Johnson's Stocks. Week one of the new month in November. I've had back-to-back green months now. I was just chatting to Roland the other day and he was saying, son, it's about time you sized up because you're about to bank. So I'm very excited. Made a few hundred this week. I'm up about 350 on the month, and I'm aiming to make 1,500, 2,000. Keep on living the dream. And let us show you the Excel and the trades. If you want to buy the Excel, the link's in the description. We'll see you later. We're in 11th of November, so we're done like the first third of the trading month. I'm up like 380. So at this rate, I guess over the next third and the next third, if I continue, should be up about 1,300, which will beat last month's earnings. But I'm up about 50 on DCIX short. If this comes off, I think I could win a good $1,000 to $2,000 if it comes down. It's a bit of a gamble, DCIX, but I'm up on it anyway. So really, I mean, with that as well, I'm up about 430. So it's good. Winning averages, that's not great. I've won 6 and lost 2. So my winning average is 75%. Doing well. Been quite on the money. Being careful with trading. And yeah, it's again, I've been selling the spreadsheet, $100. The YouTube link is in the description if you want to pay by PayPal. A lot of the tracking I've done has helped me get successful by tracking patterns, tracking stocks, and it's not much else to say. It's going well. I was talking to Roland the other day, and he was saying, let's have a Skype call, and we'll size up. I'll size up, and then maybe we'll start seeing $2,000, $3,000, $4,000, $5,000 weeks ultimately. Okay, I don't want to go too much into BBG, but I just want to show the losses so you guys don't think I'm only showing the winners. Now, if you've been watching all of the videos, you know that, I mean, this is an earnings winner. I think it had earnings on the 31st of October, big volume increase, multi-month breakout, super solid chart. And normally what I like to do is look for these stocks that have actually got really, really heavy long-term resistance that other people haven't looked at. So I've got the edge. And with this one, when it was breaking out of the 5s, it was multi-month breakout. It had no real resistance, tiny bit in the 550s, a little bit, and then some in the kind of the 6s as well, and then a lot here in the 670s where it's bottomed, which is funnily enough where it's topping out. But this was a terrible short because it was trade 0. It was my first trade with the guys. I can go like 5-day chart, and I was just thinking, I just wanted to learn how to short on trade 0 and how to place orders and stuff. So basically, it broke out. It had its big day here, and then it had a good day too. And I just thought, I'll short this kind of 640 level, because it topped and had quite a heavy afternoon fail, so it should probably do it again. And the area, the 640 I shorted, it broke out, came back down, shorted more, popped up, thought it's going to fail, started to come down, shorted more, popped up again, and then it came down, and then at this point it was only a $30 loss. When it got up to here, I got forced buy-ins in the 670s for half my position. That was an immediate 120 loss or something like that, 130 or whatever, and then I was fucked, and I carried the pain of, is it going to come down? Didn't come down that day. And then I carried some more pain of, will it come down? It dipped, didn't crash, came back up, tested this level, didn't come down. And then on this day, it finally cracked, and I got out for the rest of my shares. For the second half, pretty much break even. Lost 10, 20 bucks. But the point is, don't short. You can short earnings winners. I know Tim says don't do it, but you can in certain situations. But you've got to, and if you're new to shorting, never short them, because it's too tricky to define the situations where you can and you can't. But if an earnings winner has got massive resistance and you're getting in short on the resistance line, it's not a bad short. The reason that I lost money on this is because I was shorting where there was no resistance, there was no sign of topping. But when you're getting into the 670s, if you're shorting 670s, 680s, it's not a bad short. I mean, this has fading volume. No one's interested in it anymore. The news is getting old. If this cracks this 640s level, it could be fucked. It's kind of funny because like the YouTube videos are getting more popular. Like they were getting like 1,000, 1,200 views. Now they're getting 16, 1,700 views. I'm pretty sure they'll go 2, 3, 4,000 views in the future as time goes on. But the irony is, I'm just doing the same stuff, saying the same thing over and over and over and over and over. And I don't know if you guys realize it or not, but it's the same shit. It's the same pattern over and over and over. And I'm just saying the same thing. It's dead funny. But hey, I mean, I'll say it enough times, it'll click for some of you guys, and then you'll start copying and you'll make money on the pattern too. But OPHT, it gapped up from the 220s to the 280s and failed. How often do you see me play these stocks that gap up and fail? How did I know it was going to fail? Many reasons. One, oh god, can I show you guys this properly? How did I know it was going to fail? Lots of reasons. Main reason is because I track every single stock that gaps up more than 25%. I track them all. I track what did it open at, what did it close at, what did it gap up to, how much did it spike at the open, what was its first day down, what was its second day down, and I found out that not all but about 75%, 70% of these stocks fail. So if the news isn't good, if the long-term chart's bad, it's about an 85% chance it's going to fail. What else did I find out? That on average, these stocks spike, I mean, the ones that fail spike about 7, 8, 9, 10% before failing. So when it's got resistance in the threes, when it's got a terrible long-term chart, when it's got the whole dollar mark, 3 in itself as resistance, like, there's a lot of reasons why it's going to fail, hey. So, bear in mind, it's also broke, it came up, fell, crashed. Now, there's a lot of positives here. 1, $3 resistance. 2, long-term $3 resistance. 3, I track this pattern all the time on Excel, which you can buy the Excel, it's $100, and you can track your own data and find your own results. Because the problem with trading is you want to do what everyone else wants to do. It's herd mentality. But if you find the stats and data that prove factually that this is the entry point you need to be in because you've tracked all the data on it, then you have much better success. So 1, $3 resistance. 2, it's failed pre-market. 3, $3 in the number as its resistance as well as the long-term resistance. And then 4, this pattern fails 75% of the time. 5, it's double bottomed. Shorts expected it to panic more than it did. And then all the shorts have squeezed themselves up. So everyone's shorted, short, pre-market. And then when it's double bottomed and started to push, all the shorts have covered and got out. So that's my perfect time to short into the threes. It's longer term resistance. I can risk kind of off high of day. And I'm building into the spike. I'm shorting into this spike. So when you see a pattern that pre-market, double bottomed, when you see this, it looks scary as shit in real time. But if you know the big picture that I've just explained, you know that it's more than likely going to fail. So I'm short around 5,000. I think I was in about $5,000 at the max, and then I was covering in the 290s, covering in the 280s, covering in the 270s, and then I was out the last for the 280s. So I was about 4,000 to 5,000 in at this point. And again, you do have to take a risk in trading, but you've got to know. Whole dollar resistance, top, came over just and came back down, topped. It's already up about 80% on the day. It's failed already once today, intraday. You've got the edge because this is all the shorts covering. This is the 90% losing. You're the little 10% that wins, taking advantage of other weaknesses, shorts covering here. Next thing you know, it goes down, and I could have took the profits right down to the 260s. I need to hold on to winners longer. Cook-a-doodle-doo! RTNB is pretty straightforward. It's red because it's halted, but it's a long, and I wanted to show you guys a long. So it's funny because like long-term charts don't matter, right? Well, this is a nice double bottom, but this chart is terrible. But it's a former runner. It went from the 1s to the 3s. And then here it went from the 77 cents to the 160. So this stock is known to double, triple, and it's only a 6 million float. So anytime it gets like 10 million shares traded in a day, or 8 million or 5 million, anytime when it's like rotating its float, and it's got a history of doubling and tripling, shorts are terrified. So these are very good stocks to buy, and they're very volatile. So if I just go on the kind of the 2-day chart, like there's intraday patterns that work. So for example, I mean, generally, I don't like buying breakouts unless it's off a close point of consolidation. But because this stock has a history of tripling, because shorts are scared of it, because it's traded so much volume that it's traded its whole float, I'm willing on this occasion to buy the breakout. And instead of risking off consolidation, I will only buy it if it breaks out and holds the breakout. So these are the only two long patterns I play. When it breaks out, and I'll risk off consolidation and it's a multi-month breakout, or I'll risk if it's got a lot of positive indicators, like again, triples and volume, shorts are scared. Let us start again. Shorts are scared. Massive volume. History of running. For this reason, if it popped up, I was like, okay, it's popped up at 126. If it comes back down and holds, I'll buy it. Lucky for me, there was a big sell in the 140s. Drove this wick down to 126. Perfectly got bought in because there's obviously like 320,000 shares got sold here. Obviously, I'm not the only person thinking I'm going to risk off the breakout level and buy the dip. I'm not the only person. A lot of good traders will do this. So, got bought in, ramped up. I was selling some in the 40s and 50s. Got right up to the 60s. And then it started coming down, so I sold in the 140s. Then it got halted. You don't need fancy indicators. You kind of don't even need VWAP, but VWAP is helpful. You don't need AMAs. You don't need moving averages. You just need support and resistance. That's it.
I'm dancing, and I'm a little bit fucking colourful because I'm at the colour run, and this event is about being a bit different, being a bit extraordinary, a bit out of the ordinary. And I just want to say I am on back to back 3 months trading, and I didn't get it by being fucking ordinary. I got it by having drive to be different, going outside of the norm. And this is about going outside the norm, being different, being colourful, living the dream, living the colour dream. We will not fail. Oh, see you.